Velkommen til Rig på Viden, en podcast om forskning i investering, finans og økonomi. Mit navn er André Thormann.
Og jeg er Henrik Rasmussen.
This episode is made in collaboration with Nordic Fintech Week. This is a conference organized by Copenhagen Fintech and Nordic Fintech Magazine. It will be held the 27th and 28th of September. There will be plus 100 speakers and sessions, so make sure to get your ticket. You won't regret it. Stay tuned on Rig på Viden's LinkedIn page because we will actually hand out a few free tickets. How will AI affect the financial sector, and are banks and other financial institutions even ready for AI? This is the topic in this episode of Rig på Viden, where we have founding partner of Nordic Fintech Magazine, Chris Crespo, with us. Thanks a lot for participating, Chris. Can you start by maybe introducing yourself? Who are you?
Yes, of course. It's a pleasure to be here. My name is Chris Crespo. My academic background is in behavioral economics, but I've spent 10 years working as a strategy consultant for Gartner in the UK and in Spain. I then moved over to Denmark. I had a role at Nordea as chief futurist, where I was in charge of, amongst other things, working together with the various business areas to draw up the digital strategy for the bank. And I left Nordea in 2020 to start Nordic Fintech Magazine, which is a company that I founded with a couple of Danes that covers the fintech space in the Nordics and the Baltics. So essentially, we thought that the real ideas, the innovation that is disrupting the industry is starting with the founders. And we wanted to give them a voice and a platform for them to be able to share their insights, their thought leadership, and what were they up to in terms of redesigning financial services from the bottom.
That's interesting. We are going to talk about the financial sector, right, and how that's affected by AI. Did you ever come across AI when you were working in Nordea?
Okay, so maybe just to step back and clarify a little bit what my role was. So as a chief futurist, I was in charge of two main things. The first one was to scout the market for what were the trends that were redefining not just financial services, but other industries. So I would go out, I would go to conferences, I would speak to people to see what are really the digital trends that are making a difference in retail, in automotive, in mobility, in financial services as well. And then I would gather all that intelligence, I would bring it into the bank, and I was in charge of making sure that the development of the strategy was taking those things into consideration. So I never really implemented or deployed any sort of AI tools at the time. But we were very, very keen on laying a foundation for what AI is today. And so at the time, we were very much focused on exponential technologies like big data, like machine learning. There was a really large effort to build a data lake within Nordea, which is really the foundation for AI models to operate. This is having these very large volumes of data on which the algorithms can work.
Okay, the reason why I'm asking is, I guess you would have come across many technologies all the time, right? Mm-hmm. Which people would have been saying was relevant for banking, but maybe in reality wasn't. Do you recognize that?
Very much so. I think that's part of the hype. Whenever there's a hype in the technology, you immediately start thinking this is going to change the game for everyone. And very often, the technology doesn't really deliver on the expectations and gets forgotten. And then a few years back later, it makes a comeback in a much more applicable sense. I think we might be facing something like that with AI. And I think we can talk about the different types of AI, because I think AI has been around financial services for quite a while, right? From the simple robot advisors or the chatbots that you find on the website that everyone dislikes, right? Because it never gives you the right answer. But those are models of AI. I think what we're facing now is that with the emergence of generative AI, which is a flavor of AI that was made available to everyone through ChatGPT, all of a sudden there's like a massive interest, because for the first time we've really been able to see just how amazing the technology is, and we're starting to imagine what a potential use of generative AI could be in various industries.
That's interesting. But then the natural question is, of course, is generative AI a hype?
Well, I think it's hyped up, but I would also say that anyone that has played around with generative AI would probably agree that it's a hype that's justified. The reason for that is that for the first time, we've been able to see how the application of algorithms on really large databases has the potential to really recreate something that looks very similar to real intelligence, especially in the creative process. So for those who have been playing around with ChatGPT, I think it's amazing just how natural the language that it produces reads like. For those who have been playing around with Midjourney, the quality of the images are just mind-blowing. Applications like text-to-text or text-to-image or text-to-video, where you basically write a prompt and the engine creates something visual that is very closely associated with the prompt. It's something that for most of us seems like real magic. So I think that's really what the hype is behind. Now, I guess we'll discuss this a little bit later. The applicability of generative AI in various fields, specifically in financial services, that could be a little bit hyped up, but I'm sure we'll get into it.
Yeah, and actually that's my next question. So if we compare the financial sector, if we take the space, because we hear generative AI will affect the entire world, right? Mm-hmm. So if we split this up and then focus just on the financial sector, do you think that will affect the financial sector more than other industries? Or how vulnerable are the financial sector, or how big an opportunity, should we maybe say, is this for the financial sector?
I don't think financial services will be affected more than other industries. In fact, I would probably say that specifically with generative AI, it would be less affected than other industries. Maybe it would be good to try to define a little bit what generative AI is, because this is a flavor of AI models that just take massive data models and use some very complex algorithms and natural language processing to recreate what would be the result of a human-like creative process. So when you give a prompt to ChatGPT to say, write me a poem, it will then produce something that is very close to what a poet would write. If you say, draw an image of a cat drinking milk, it would actually create something that could have very easily been drawn by a professional artist. So this idea of being able to create real tangible visuals or even audio as well. You can now use AI to recreate voices. It's definitely very disruptive for many industries, but perhaps not so much for financial services. I could see that the entertainment industry or anything that has a creative angle behind it is going to be massively disrupted by it. We've already seen the protests happening in Hollywood, where actors are protesting so that production companies are not able to use their image to reproduce AI avatars in their likelihood that look like them, like move like them, that behave like them, and that speak like them, because that effectively leaves them out of a job. So this is the kind of industries where I think generative AI can be very disruptive. In financial services, I think the jury is still out. Oh. Now, having said that, there's been a couple of interesting developments that we've seen in financial services using generative AI. There was an article published in Forbes magazine by Dave Birch, who's a British guy who's a commentator of financial markets, and he quotes another guy called Mike Kelly, who basically programmed an add-on to ChatGPT called Bank GPT. And effectively what Bank GPT does is that it uses open banking to connect ChatGPT to data about your bank account. And he actually posted a video on social media where he shows how the model works, and he gives an instruction to ChatGPT saying, take a look at my accounts. ChatGPT uses an API connected to open banking, goes and retrieves his accounts, shows his balance, and then says, okay, so what would you like to do? Would you like to transfer money? Would you like to make a payment? Or in reality, it's not unlike what you get on the phone where you have to dial those services and press 1 for balance, press 2 for, which is very annoying, right? But he's been able to do that with ChatGPT. Now, what that shows is that it's very easy to connect a generative AI model to your bank using open banking. So the combination of those two technologies could be extremely disruptive, or I would say extremely powerful in perhaps putting more functionality at the hands of the customer.
Can you maybe just explain what is open banking, just to understand?
Yes, of course. So open banking is a trend that's been around for a while. It comes from a directive from the European Commission called PSD2, the Payment Service Directive, which basically it mandates that all banks should open certain systems within their domains to third parties. Initially, it was data, customer data, and some functionality. So with open banking, a third party can come and say, would you give me permission to access your bank accounts? I mean, if you let me do that, then I can aggregate all your information. I can build functionality on top of the systems that the bank has. And it's led to a very disruptive trend called embedded finance, where thanks to that openness that has now been promoted in the financial sector, other companies are able to integrate banking functionality into their customer experiences. A very simple example of that is Uber. Yeah. With Uber, you set up your account that once. That's it. That payment functionality is embedded into the customer journey of Uber, and you never have to worry about payment again. The payment takes place invisibly in the background as soon as you leave the car. Yeah. Right? That's embedded finance. So open banking, and in the general umbrella term of open finance, is the ability of accessing this data and this functionality, and now connected to ChatGPT, it sort of augments the possibilities of things that you can do with these two technologies.
And just if we take it very practical examples, I know you briefly mentioned it before, right? But very practical examples, how can this be very disruptive?
Well, I don't know if it's very disruptive in a sense right now. Right, so
but potentially,
it's a good question. I wouldn't want to just start speculating of the things that could be done with it. I think what this Bank GPT model shows is that it's not very easy, but the connectivity between open banking and ChatGPT can be done, and that could basically put a lot of functionality at the hands of the customer, where with very simple prompts they can affect activities like transactions, like bank transfers, like data retrieval directly from their accounts. So I would say that if we think about all the potential activities that could be done on the back of open banking and embedded finance, given that all the realm of potential functionality and a simple access point with ChatGPT, then it just becomes extremely convenient and extremely easy to do what previously would require you to call the bank or log on to your net bank and then try to find out where exactly on all these menus will I find the transfer option. So it's more about convenience and seamlessness as opposed to like all of a sudden creating things that were not there before.
Okay. Yeah, because I'm just thinking, I mean, it's not like most people use banks for very complex matters, right? I mean, it's transacting money. Okay, I can tell it to a ChatGPT, transact this money. Okay, I could also just click transfer, right? It's that's not a big move, right? Fortunately, we don't call the bank anymore to transact money. There are advisors, of course, advising about all sorts of stuff. If we want to buy a house or whatever, it could probably. But then we are back to the robo-advisor. I'm just thinking, right? And it's
not
you
exciting.
Would be stuck again, right? With the robo-advisor would be a bit better, and probably we're moving towards robo-advisors being really, really good. But still, you would have extremely detailed questions that would be super difficult, right?
So where the potential of the technology becomes a little bit more exciting and interesting is when we move from, okay, now we can do this very simple task with prompts, to what happens when a generative AI tool can start learning my behaviors, my financial services patterns of consumption. What if it can learn my risk appetite and my preference for investment, and then not only recommend where to put my money, what to do with the extra money I have at the end of the month, which securities to buy, but it could then also start acting on my behalf without me even interfering. Say, this tool knows me so well, it knows my risk appetite so well, maybe it will just run on the background, perform trades on my behalf, on my portfolio, without me really having to do very much else. That's really the potential of the technology that lies ahead of us. I don't think there's any banks that have already enabled that yet, but we've certainly seen a lot of banks that are testing generative AI tools, mostly internally and mostly for operational processes, nothing directly facing the client, except perhaps for another tool that's been developed by JP Morgan. I believe it's JP Morgan. It's called Index GPT. And Index GPT is basically a tool that uses generative AI to allow people to perform, to buy and sell securities. So this is a much more applicable tool that allows you to control your portfolio using large data models, algorithms, and the simplicity of the interface that just allows you to either issue prompts or say, this is what I'm interested in. Your task is to maximize my portfolio over the next 30 days. Off you go. It's not fully out there yet, but we already see some banks working on that for future development.
Yeah, that's interesting. And then we are very far into the future, probably, right? But I don't know. But I'm just thinking, we always come across a legalization, right?
Yeah.
Basically, the legal fundament of all these things, right? And one thing that we know that the financial sector is that it's extremely regulated. And especially when it comes to private clients, right? So I cannot even say to a private client that I'm a equity analyst, right? So I recommend to buy or sell shares. I cannot say to a private client that I want to sell this share, or you should sell this share because they are private. I can also only sell it to institutions, right? Yeah. So I'm just thinking, okay, if there should be kind of like an approval for a system or a generative AI kind of system where you allowed them to do anything because they knew you.
Yes.
I mean, no politicians would allow that, right?
Yeah, probably not. And there's definitely already regulation in the works for the use and consumption of AI. I think, however, what's most likely to happen is that these tools will be tested in less regulated environments. Yeah. And I don't know if I can say the C word in this podcast, but in the crypto world, that's really where a lot of this innovation really takes off, right? Yeah. Where regulation is not very clearly defined. I can very easily see that, okay, well, maybe there won't be a generative AI tool readily available for me to manage my portfolio of assets. Yeah. But perhaps in the not too distant future, a tool that allows me to manage my digital assets, the different cryptos in my wallet, my NFTs. That's a little bit more relaxed, and maybe that's where the technology can really be tested before regulators come and say, okay, well, now if this wants to go mainstream, then we need to put some safeguards around it.
Yeah, but that's interesting, right? But that is, super tiny part of the financial sector, right? If it even is the financial sector, because is it really implemented? Did Nordea allow for trading cryptos?
No, not at all. But it does raise an interesting question, because we see that this alternative financial system emerging on the back of DeFi and blockchain-enabled models keeps gaining momentum. Perhaps it's not as, we don't hear as much of it as we did last year, because AI has now completely taken over the focus. But you have all these cryptocurrencies that have billions in market cap. So clearly there is movement, there is activity, and some people are using it to some extent. So
yeah, and definitely there would be more openness to implement new technologies, right?
As well as more risk.
As well as more risk, of course. One thing would be to in a general terms, get a generative AI to manage your diversified portfolio, but towards your crypto portfolio, you double the risk, right?
Of course, and there's a tremendous question there to be solved, which is the liability.
Yeah, exactly.
Who's responsible for the algorithm? What if it gets things very, very wrong? Who do you go to complain? Like it's quite risky, of course.
But that we have every time, right? That's the same with self-driving cars, I guess.
Yes.
But that would be a matter of time, I think.
I agree.
The next thing I wanted to hear also general about the financial industry and your experience with it is we often hear that the financial sector is what basically digital companies or data companies, right? And therefore, coming back to what we spoke about before, I would think that the financial sector would be very much affected, either in positive or negative direction, depending on how you view it, from generative AI, because it's all data, right? You have numbers, structured data, things that are, wonderful for technologies like this. What do you think about that?
Oof. Well, I think there's perhaps some assumptions that are worth validating. I think we've heard this, that banks are really digital companies, and I don't know to what extent we can really say that. Of course, they have a lot of digital technology, but we still see a lot of banks, especially incumbent traditional banks, that are operating on mainframes, whose systems are just so convoluted that it makes it extremely difficult for them to really adopt like brand new digital technologies that can deal with all the new functionality that you see, for example, emerging in neobanks or in fintechs. I think that's a matter of time, because banks that don't really evolve to keep up with the demands of the customer and the expectation of some customers will eventually become irrelevant. But I don't think that most banks are there yet. I think partly because it's very difficult. It's not that banks are just sitting back on their chair, just relaxing and seeing. It's just very difficult. There is a lot of intricacies and a lot of systems that talk to each other that makes it extremely complex to fully digitize banks. Secondly, because of regulation. It's difficult to navigate in the regulatory environment, especially because it changes regularly as well. And thirdly, it's also a culture thing. Having worked in financial services for most of my career, I think it's easy to see that there's a different mindset between traditional banking services and what you would consider digital companies. And it's not just about, oh, here's my PDF, I'm a digital company now. It's all about to think, how can we remove friction from the customer experience? How can we use technology to make invisible what previously was visible? But it goes as far as to say, what do we sell? What do our customers want to buy? And this idea that, I think if we're in a bank, we think our customers want a mortgage, our customers want a car loan, our customers want X, Y, and Z, which coincidentally matches perfectly our portfolio. And we forget that customers don't want a mortgage, they want a home. They don't want a car loan, they want a vehicle to take them from A to B. So that mindset of saying, what does the customer want and how can I provide it with the tools I have in the most seamless and convenient way to them, has not really caught up with all financial institutions.
That's very interesting, I think. But also, and that's another thing I've also been hearing, especially from consultants, that the back-end IT systems in banks is extremely old and complex. Yes. So maybe also a few words on that. I mean, is it true that new technologies is actually extremely difficult to implement into IT systems within banks because it's all very old backends that is extremely vulnerable to what's changing, basically, and very expensive? We saw Nordea, I think, making extremely big IT investments.
Yes, of course. So I think if you look at the core banking platforms, which is the systems that basically operate all the ledgers in banks, most incumbent organizations have these tools that have been developed for 40, 50 years. And as that development happens, every time that there's a new tool integrated, there needs to be some customized development to make sure that the tools can talk to each other, that the data that is contained in one can be extracted in the way that the other tool needs it. Now, if you think that happens all over the bank in all units, you end up with something that is so complex that it becomes almost an impossibility to change it. We've seen a lot of service providers that are coming out with these banking as a service solutions, especially core banking as a service solutions that offer to say, look, forget about your old Frankenstein creation. Just here's a cloud-based solution that can enable you to do the same. And to some extent, some banks are considering it, and some banks are actually deploying it. But I think the complexity cannot be understated. There's risk involved. There's a lot of data, and we're talking about the most sensitive type of data, right? Is people's finances. So you can't get it wrong, and that's also why I think banks sometimes take a bit longer to adopt these things. But eventually, all banks will have to do something about their back-end systems if they want to be able to compete with new entrants, if they want to be able to compete with technology companies that are launching value propositions for financial services like Google, Apple, etc. It's just a matter of time. And I remember the core banking replacement at Nordea, the simplification program, which I don't know, I haven't followed up with it, but I don't know if it's still going. When I was there, it had been going for 7 years, and it was still nowhere near completion, right? So,
but it was very big amounts. I mean, I recall from an investor angle, it was very big amounts they had to invest in this.
I think it was the largest core banking replacement project, at least in Europe. I don't know if we can reveal how much it was, but it was huge.
No, it's public somewhere. I don't know the amount. But
yeah. Well, at the time, I believe it was 1.2 billion.
Very high amount. Yeah, sounds correct.
Yeah.
But yeah, it's at least it cost a lot, right? And many banks are just standing in front of this journey, right? But that also, I think, sets a limit to how much new you can do, right? Because you need to do that first.
Yeah,
I guess it's a big journey, right? And then you have a pause in terms getting new technology into the space as well. Right?
Yes, yeah. And also, lots of banks decided to go for an alternative strategy, which was let's develop a brand new bank on the side that is developed with new technology, and then once that gets some traction, we can transfer the accounts from one to the other. I think that we saw a trend a few years back where all the banks were creating their side bank, which was a fully digital bank. I don't think that worked out that well. Many of those have now closed or have been reabsorbed or sold out. So yeah, it's a challenging environment in which to operate.
Interesting. The last thing I wanted to hear before we also need to talk about your article. That is, and you have been in Gartner yourself, right?
Yes.
I also mentioned it before we began the recording, but this was actually new to me. This Gartner hype cycle,
yes.
Which I also think is really relevant in terms of discussing AI. Maybe you have worked in Gartner. Maybe you can explain a bit what it is and also where we are on the hype cycle for generative AI.
Okay, so the hype cycle is a tool that was developed by Gartner that indicates as the name says, the various stages in hypes of new technologies. And that usually is like a very pronounced slope, which is called the peak of inflated expectations, where the technology reaches the top and everyone thinks that this is going to be the next best thing after, sliced bread. Then there's a slope in which that technology sort of goes down, where reality hits and all the expectations that we had for the technology don't really deliver. And then there's a resurgence, which is the moment that technology sort of hits the mainstream, which is it starts to plateau and really becomes mainstream, and really now we can understand it for its real applicability and its use in real life scenarios. And most technologies go through that hype, then that slope down, and then that plateauing in the mainstream. With generative AI, I would say I haven't actually seen the hype cycle for generative AI. But if I was to guess where generative AI is in that curve, I would say it's either peaking or just in the inflated expectations side of things. We will probably see it just go down shortly, and eventually it will plateau, and it will become mainstream, and everyone will be using it, and we will all be thinking like, what were our lives before we had this available to us?
And what is it, the rule of thumb? Is it 2 to 5 years or something before it becomes mainstream, or?
It depends. Some technologies take longer time than others. With AI, what seems to be remarkable is that it's changing at such a speed, and that's partly because the quality of AI models depend very much on the amount of information available to them. So the more they're being used, and the more information they're being fed with, and that becomes exponential. So that's AI being one of the exponential technologies. What often happens is that, like every exponential curve, it's a very slow uptake, almost unperceivable. It seems like it's not making any inroads. Yeah. But then when it hits that inflection point, it just goes up with a very, very pronounced slope. And I think that's probably what will happen in a much more reduced period of time than say, cloud computing, right? Cloud took quite a while to take off.
But isn't that, I mean, that view, isn't that just a sign that we are on top of the hype cycle? That, we're talking about, this is super, I mean, we've never seen anything like this, it's exponential, all these different things. I know that it might be, but when you cannot see any clouds in the sky, right? Just that we continue to go, then we are really peaking the hype cycle.
Perhaps you're right, but then I think maybe it would need to be qualified by industry. Because as I say, I think for financial services, that hype, at least in my view, it's still a little bit hazy. For creative industries, absolutely, we're already there, and we see how fast this is changing, and just how amazing the outputs of these generative models are. So yeah,
it's interesting, this thing about the creative industries, because I think that this is just my perception. When we have been talking about technology, we have also always been thinking, again, my perception, that creative industries were protected, right? Because it was creative, so you cannot replicate it in any way by a technology. But really, how creative are creative industries? It seems that it's also just, picking up data in different ways, gathering together in your brain, and then spitting some art or movie or whatever out.
Yes, you're right. That's a little bit confounding, because one would have thought that those are the ones the last ones to be disrupted. I think that still holds true. It's just that perhaps creativity is changing a little bit, right? Because I'm pretty sure there is a creative process in designing algorithms, or in learning how to use creative prompts to generate art that perhaps it's mind-blowing. So while maybe the very basic act of grabbing a pen and paper and then start drawing something could be easily replaced by AI today, I would say that there will be like a more sophisticated creativity process that still will rely on people coming up with great prompts, or people coming up with great algorithms that can create things that we haven't seen before. It's an interesting question. There still needs to be someone behind the algorithms, I would say.
Definitely. Before we run out of time completely, then let's talk about you wrote an article, and it hasn't been published yet, actually. So let's see if it's published when we publish this, but at least people will get a peek into what it is. But you wrote, Navigating the Transformation, Generative AI's Reshaping of Financial Services. Can you maybe start elaborating about why you wrote this?
Yes, of course. So that's the working title. This article is going to be published on the fall edition of Nordic Fintech Magazine, which will come out mid-September. It's also the magazine that will get distributed during Nordic Fintech Week, taking place in Copenhagen, 27 and 28 of September. And it also gets distributed all across the Nordics and the Baltics. The reason I wrote it was primarily to try to understand it myself. I think when you go through the writing process, you polish your thinking, right? So I have hundreds of conversations with founders and entrepreneurs on every year, and we've been hearing a lot about AI, and I just needed to make sense of all the things that I was hearing about it. So I decided to put it down on paper, primarily for that. Secondarily, also to inform our audience of what's happening. I think if our audience are anything like me, they probably are very confused with all the terminology that gets thrown around, with different flavors of AI, with all the names of these tools that seem to be, there's just new tools every week. So it was more just to say, okay, well, this is what we know. This is probably how we should think about it. And maybe these are the areas where we think that AI could be most useful in financial services. Things like fraud prevention, things like predictive analytics and recommendations for, as we talked about, index GPT, risk management. Those type of functions, that we can really see a clear use of AI technologies in the short term, and well, we wanted our audience to be a little bit more informed about that.
Did you use ChatGPT to write this?
Okay, very, very interesting question. You put me on the spot. So what I used ChatGPT for is to refine my writing. So usually what happens is that I go and write something, and I say, okay, can you make this more concise? Can you make it a little bit more engaging? The results are not often great, so It's not a 5-minute job, because then you have to go paragraph by paragraph, say, okay, well, this is good. I like how you phrase this, but I don't like how you phrase this. So you have to really come through. But I think it really helps in especially for non-native English speakers like myself. It helps in being able to convey the messages a little bit more clearly when you use the tool.
Oh, so you did use it?
I use it to correct it. Yes, I did.
Okay, and you didn't use it to find all of these developments. Did you sum up some of the developments you see, especially in the financial sector, right?
No, so the developments came from articles, a number of articles that I've been reading, and from many of the conversations that I have with founders and with entrepreneurs. So, for example, I recently was at the Norway Fintech Festival and got a chance to speak to the founder of MobeAI. And MobeAI is a really interesting company that is using AI technologies to detect potential fraud in identification in financial services. I'll explain how. Within the KYC process or within the identification process, you can now use AI tools to generate images that look exactly like someone else, that sound exactly like someone else, and that could fool any person to think like, yeah, this is real. So what this company does is it uses some technology that detects the reflection in your eyelids of light. What does that mean? If someone has a pulse, blood going through their veins, there's very, very, very tiny changes in light when blood runs through your eyelids. And this technology can detect that variation in light and say, yes, this is a real life person, versus no, this is a deep fake. So it's technologies like that I think are really exciting, really interesting, and I just wanted to be able to compile all those things and say, okay, we need to let our audience know that all these things are coming. What's the usability and what's the potential disruptiveness of each one of these?
And let's maybe that was one example, because you go through a lot, and we spoke about the open banking in the beginning, right? But can you maybe sum up some of the, most interesting technologies basically for the financial sector that you see and sum up in your article?
Yes, of course. So I would say open banking it's very interesting. What we're now talking about is open finance. So how could the principles of open banking be expanded to the rest of financial services? And how will then, through open finance, financial services will be embedded into the customer journeys of every single other industry? So we've spoken to car automotives, to travel companies, to retail companies, to e-commerce, who are coming and saying, like, yeah, you financial services, you need to understand what we need from you in order to be able to make the customer journeys for our customers seamless. Effectively, we should be able to integrate your insurance value propositions, your credit value propositions, your lending value propositions into our customer journey, so that customers don't even have to worry about that. They can get access to credit, access to money, access to insurance immediately whenever they're dealing with us. So that confluence of industries is very interesting. We have, of course, still the Web3 environment, where even though we're not hearing that much about it, developments are still happening. There's the whole crypto space, all the DeFi protocols, which enable financial services that we haven't seen before. And that's really where new business models are coming about, are really, really innovative, like pooling and yield farming, and all these terms that are very relevant to the crypto space. What's it called? Micro lending, in a sense that you can borrow a crypto for a matter of seconds. So you borrow a crypto for, say, 5 seconds. Then you pay an interest on that crypto for 5 seconds, but then you can use tools to invest that crypto asset during those 5 seconds repeatedly a certain amount of time. So there's all these functionalities on the back of technology that are very interesting, and this is all happening in the Web3 space. There's, of course, the future of payments, future of lending, future of regulation, future of wealth management, future of insurance, where we see a ton of innovation happening. It's really worth taking a look at that, because there are lots of things that perhaps we wouldn't have time to go into detail, but that are making all these various parts of the value chain of financial services very, very interesting, and potentially quite I wouldn't say not revolutionary, but quite distinct from what we experienced in the past, in the sense that they are making things a lot more easy, simpler for customers, and in a sense, I would say perhaps even commoditizing some of those services for the customer.
Okay, that's interesting, and I hear you as the developments we see, which is also natural, I guess, for innovative process. It comes from the small, more, less structured parts of the financial sector, right?
Yes.
Small fintechs,
Yes.
basically. The big banks are not really innovating here, or what do you see?
I think some big banks are innovating. Many of them are doing so in partnership with technology companies, with service providers, or with fintechs. I think there's a very simple reason for that, is that fintechs are much faster. They can bring products to market very quickly, while in banks you need to have a specific process and committees and decisions that make those decisions take a lot longer. Regulation. In a bank, your hands are really tied by regulation, while in a fintech, perhaps you can operate, since you're not really launching anything immediately, you can operate outside the boundaries of regulation for some products while you test the proof of concept, and that also gives you speed to market. And lastly, it's also it's this culture thing about what can we do with technology? Let's run fast and let's learn along the way, and let's learn from failure, which is a very startup-y sort of mindset that you can't really afford to have in most organizations in financial services, because it's not okay to break things and it's not okay to fail. You need to have your customers' interests at heart at all times.
And I mean, I thought actually, and now I'm looking at big banks here, right? Mm-hmm. I don't have the numbers, but I would think that a number of FTEs within especially compliance, back office sorts of stuff, despite we have had a massive positive technology development with new technologies helping, then numbers of FTEs have just been going one way up, right? Because of regulation, because of, you mentioned yourself, KYC, AML, anti-money laundering, all these different things that especially has been relevant in Denmark, right? Mm-hmm. Are there a big potential here, or are regulations so tough that we need to keep a very high certainty here and therefore a lot of FTEs?
Well, I would say that regulation requires to have professionals that are constantly adapting to regulation. I would say that the FTE numbers is perhaps more in relation to if the bank can now use technology to do a lot of the menial tasks that require a person to really go and do very repetitive, boring tasks. What could you use your FTEs for now? So we see a lot of companies, maybe scale-ups, that are thinking, okay, we went all over with digitalization, thinking we'll digitalize everything and there will never be a single human being behind any of this, which was at the very beginning, maybe 8 years ago, to now think like, let's digitalize what the customer doesn't see. Let's use technology to take care of those complex, boring tasks. And let's get people to build those relationships with our customers. Let's get more FTEs that can do the face-to-face interface, that can be at the other end of the phone, that can build that human-to-human relationship that will allow us to serve our customers better. And when we do that, let's empower these FTEs with the right tools so that they can help the customer make the right decision. So I think that's a different way of thinking that is working quite well for many organizations. That certainly shows that there is not like technology is going to replace your work, but on the contrary, it's going to take away the boring part of your job so that you can actually focus on the things that deliver real value to customers.
And there will be enough work in that.
I would say so. Yes, I think so. We're all bank customers, and I could say that I dread having to talk to a chatbot. I dread having to spend 15 minutes just playing with the buttons only to find out that my query could have been answered in 2 minutes by someone on the other end of the phone. I know there's a business.
Then you're back to GenAI, right? Shouldn't that improve robo-advisors incredibly?
Well, I guess it could, but that also depends on, am I able to ask the right question to get to the answer? And then it's putting the onus also back on the customer, which I don't know. We'll have to see.
Yeah, let's see. What are your concerns about this?
Well, my concerns specifically with the use of generative AI, and this is more of a broad concern rather than one applied to financial services, is that it still has some security concerns, of course, some privacy concerns, but also there's some biases behind it. And what do I mean with that? These models operate on large amounts of the information that's publicly or privately available, and that's how they work. What's going to be the answer that I give? Now, we've become pretty good at finding information, right? With Google, we now are very proficient Googlers. We can just go on Google, find out what we need, and that's been the sort of the first experience that most of us have had with digital technologies, in which we ask a question, we get a number of answers, and we go and check. With artificial intelligence, we're no longer talking about information, we're talking about knowledge. So whoever controls the algorithms that output knowledge will have an enormous impact on public opinion in all matter of things: politics, economics, healthcare, cultural and social aspects. I think most of us take Google as an authority. You can claim something. How do you know? I found it on Google. Okay. Sorry.
You said something bad about Google.
Yes, they're listening. They're listening. So with generative AI like ChatGPT, we might start taking whatever ChatGPT says as an authority, and we don't really know what's behind it in terms of the algorithms. I think almost no one knows really how these algorithms work and how they're. Can we trust the output? Should we just believe it blindly without having any other generative AIs pose a contrary view? I don't know. I think that's a concern I have. I think we're all humans, and we look for the most expedient and easiest ways to get to an answer. The problem is that what if that answer is perhaps informed by a very one-sided view of things, as opposed to a much more neutral and balanced view of whatever it is that we're trying to find out? So that's a concern that I have.
That's a good point. And if it wasn't caught on the mic, then what happened was that Google, I think when you said Google, Chris, then my Google Home went off crazy, saying something.
There we go.
Yeah, that was what happened.
Yeah.
We are actually running out of time here, Chris. So can you maybe sum up what's your key takeaways from your article, generative AI, if the listeners just should listen to 30 seconds here?
It's very simple. Digital has to be experienced. I cannot tell you about digital technologies just by telling you. You have to go and check it out. So for anyone who's remotely interested in the potential application of generative AI, go and use ChatGPT. Go download a Discord server and try out Midjourney. Try out Stable Diffusion. Try out text-to-text, text-to-image, text-to-video. Explore the technology. It might not have any relevance with your day-to-day activities, but it's important that you get to see what the technology is doing, that you get comfortable with it, and you start exploring it. I've wasted countless hours just generating images on Midjourney just because it's so fascinating. So I would say that's probably what I would say. It's a new technology. We all need to become familiarized with it, and it could be quite useful in our works, in our jobs. But it's certainly fun to go and try it out. So I would recommend everyone to go out and give it a go.
Don't go waste hours, but learn.
Exactly.
Thank you so much, Chris, for participating. It was a pleasure.
It was a pleasure too. Thank you for having me.
Tak for, at du lyttede med til Rig på Viden. Jeg håber, at du lærte noget, og hvis du nu synes godt af vores podcast, så kan du støtte os ved at følge den på Spotify eller skrive en anbefaling på iTunes. Inde på LinkedIn, der kan du følge André Thormand, Benjamin Somofen eller Henrik Foged Rasmussen. På genhør.